Hi, Holochain is doing really well recently. We are looking at 32% price increase in the last 24 hours, the best performing cryptocurrency among the top 100 in terms of market cap. Now, the fundamental question is, does it make sense to jump on this rally? And in order to answer this question, we are going to run a backtest. We are going to make a simulation of buying and selling the HOT token. That's the ticker symbol of Holochain. We are simulating that in order to find out what's potentially the best strategy to time this. Because timing this asset, timing the ups and downs of this asset is essential. This here is just the US dollar chart of Holochain, right? But when we look at this relative to other coins, so this is HOT versus Ethereum, this is massive, massive volatility. This drop here was more than 95% underperformance versus Ethereum. And then when the rally comes, right, when times are bullish, we are looking at an outperformance of almost 3,000%. Now, how can we time this? How can we enter the market when things go up and be outside of the market and not lose temporarily more than 90% when things aren't that great? So the backtest I've done uses moving averages. I personally like to use moving averages because this approach works for a lot of different cryptocurrencies. And I've backtested the simple moving average, the exponential moving average, and then compared this to buying and holding. So before we jump into the results, right, we've got quite a bit of interesting data over here. Before we jump into this, let's quickly talk about the approach. So we take a moving average that can be simple or exponential, and then we adjust the duration. So we can have different durations of the moving average, right? We are now looking at the daily prices. So we could take the 7-day simple moving average that looks like that. We could increase the duration where we then have potentially less failed signals, right? But where we also then potentially react a bit slower. And so we have to find out, should we take, for example, the 50-day simple moving average and then take all of this drop here and wait relatively long until we enter? Or should we take a shorter term moving average, then potentially exit the market here where we shouldn't have, but also join this rally early, exit this bear market early as well? So the duration here is important. So as you might have already inferred, the idea is we want to be in the market when the price is above. We want to be outside of the market when the price is below. Or alternatively, we want to bet on falling prices. So we want to short the Holo token when the price tends to decline. Now, figuring out that duration isn't that straightforward. So that's why I've built this calculator. And for this calculator, we've got several data points. Our first price is from the 18th of February 2019. We don't start trading though until the 10th of April 2019. Why is that? Because we are going to backtest all the daily moving averages up to the 52-day moving average. So we have to start the backtest 52 days after our first data point, because to calculate the 52-day simple or exponential moving average, we need 52 days of data. Now let's quickly run through the parameters over here. I have assumed a trading fee of 0.1% for each buy and for each sell. Now why 0.1%? Because when we look here at the market where we actually can trade this, this is mainly on Binance. And if you don't have any rebates on Binance trading, if you don't move massive amounts of capital, then 0.1% is your trading fee. We don't have any gas fees, right? It's centralized trading. And I've assumed an initial capital of 10,000. Now next we can set a buffer. I remove this for now. And then we can decide, do we only want to buy when the price is above the moving average? Or do we also want to bet on falling prices when the price is below the moving average, right? So do we always want to interact with the token, or do we want to sometimes be in cash? So let's first of all just look at rising prices only. And now let's do the magic of the calculator. Let's check out all the simple and exponential moving averages by clicking over here. And so the calculator runs through all the different scenarios. So this has already been pre-populated. It's the same values as before. And we can see buying and holding over that period would have given us an annualized performance of 71%. That's by no means indicative of what might happen in the future, but it might help us to compare our trading approach to buying and holding. And so when we look at the results here in chart format, on the x-axis, we've got the duration of the moving average. And on the y-axis, we've got the annualized performance with buying and holding being at 70%. So that's the black line over here. So we can see almost every moving average here outperformed buying and holding. This is very common among cryptocurrencies. We don't see this with every cryptocurrency, but for around 15 or 20 cryptocurrencies that I've tested, it worked for all but 3 cryptocurrencies for most of the moving averages. So this is an approach that tends to work within the crypto space. And so in the end, it really doesn't matter that much what kind of a moving average you take. The simple moving average tends to outperform the exponential moving average. That's also something relatively common across a lot of different tests. When we look at the best of those simple moving averages, we should go with the 24-day. So that's what historically worked the best. It doesn't have to be the exact same moving average in the future, but I like to use approaches that tended to work in the past because psychology of people doesn't change too much, right? It's, in my opinion, better to use something that outperformed in all those prior years than to simply just take randomly the 14-day or randomly the 50-day moving average. And so the 24-day it is. So looking at this right now, let's adjust our simple moving average to 24 days. And if you look at the current rally over here, we did get above this on the 24th of March. Now we do have our little fake outs over here, right? Where we buy high and then potentially sell low. So this backtest has been built with day end prices. So we do not care about crossing the moving average within the day. We don't care about intraday volatility. We just look at the price at UTC time zone midnight. Is it above? Is it below? And then we buy or sell accordingly. Very straightforward. And so in this specific example here, right, we would have bought on the 7th of February just in order to then sell on the 11th of February and then lose quite a bit of money, right? More than 5%. And we would have done this repeatedly again here on the 18th of February, just then to sell for more than 8% of a loss. So that's a problem, right? The problem is if we are too close to the moving average, we get potentially bad signals. So we might want to wait until we have somewhat crossed enough, right? We want to give this some kind of a buffer and maybe only buy once we really got enough above that moving average, and we only want to sell once we got enough below the simple moving average. And so this is now where this buffer variable here comes into play. This is where we can adjust a minimum crossing buffer. And let's find out the best minimum crossing buffer for the 24-day simple moving average and for the 17-day exponential moving average. So 17 over here, 24 over here, and now we are going to iterate over the buffer variable, finding out how much should we minimum cross. And so the Excel macro program runs its magic. We get our numbers. And when we look at the corresponding chart, we find out that the best buffer is 0.6%. So that's not a lot of a buffer. One might even argue that this is just a random fluke because we do have some volatility in here. For the exponential moving average, the best buffer is 1.2%. So if you work with that buffer or if you don't, is completely up to you. Let's, for the sake of this example, use it. So 0.6% buffer. And let's look at the resulting charts. So for the simple moving average. So in white, we see the Holochain token if you just bought and held. And in green, we see the backtesting performance. Note, sometimes we are completely in cash over here, right? That's when the price is below the simple moving average. Now, this is a linear scale, right? Where we go up by 200K. We want to actually look at this on a logarithmic scale because we can see what happened in the early days. And here is the reason why this actually outperforms. When the price goes down, we are not in the market that much. When the price goes up, we still follow the price movements. And so the more bearish and bullish cycles we get, the more we can appreciate. And so with this trading strategy, we are almost at an all-time high using this. That's pretty different to the Holochain price itself, right? If we just look at Holochain, we are not close to the all-time high. We are actually 75% below that. Now let's look at this the other way around. Let's only bet on falling prices. So Holochain in the the end, it appreciated by buying and holding, right? 71% per annum. But if we trade just with falling prices, this is what that looks like. We still would have outperformed buying and holding. So we never bet on rising prices. We only bet on falling prices. You can see each time when our portfolio line appreciates here, the price of Holochain went down. So even the short signals, the signals for betting on falling prices, worked with this 24-day simple moving average. It outperformed buying and holding. And so this is what that looks like on a linear scale, right? 10K would have become 200K. Now let's combine both, and this is where then the real ridiculously great chart will be plotted. We both buy when the price is above, and we bet on falling prices when the price is below the simple moving average. This is the chart we get. We can barely see the Holochain price. We see a massive performance of our portfolio line here on the linear scale. On the logarithmic scale, we can see why that is. So now we've got a 10x, right, from one line to the next, not a fixed amount. And so we can really see a pretty constant outperformance. We do get more money when there's a bull rally, right? When there's a bull market. But even if prices tend to decline, we react quickly enough to still profit from this. So the overall volatility of our portfolio line is pretty small, and we are very, very high here. We are at the all-time high using this. And so it's by no means a perfect approach, right? We do have our slight failed signals. But I think that's okay. No strategy is perfect. If you can outperform already that massively, I think that's very, very encouraging. Not every cryptocurrency looks like this, by the way, right? This is one of the few that outperformed that consistently. And so if you're considering to not suffer from these kinds of crazy moves, use the 24-day simple moving average, or alternatively, if you want to be a bit more risk on, the 17-day exponential moving average. So that looks like the following, right? You could plot simply both and look at both at the same time and make up your own mind. The simple moving average, though, it performs slightly better. Now, I've done quite a few of those backtests, and you can download all of those Excel sheets here in the statistics library of the Bitcoin Strategy Premium membership. So you've got a video where I either explain the results or where I even build the Excel sheet itself. You can download the Excel sheet, you can download or watch tutorials on how to backtest moving averages, on how to backtest the relative strength index. And one thing that might be even more important than that content is to actually be aware when something like this happened, right? You want to be aware of when those moving averages cross, right? Especially for all the altcoins that you trade actively. And that's why we've got this premium alerts channel. So I've got a bot that automatically sends messages whenever something important has been crossed. And so we can simply adjust our trading and be aware of what particular asset to watch. If your favorite altcoin isn't yet backtested, if it's not yet in the Premium Alerts channel, then simply ask this here in the chat. I do make a backtest almost every single day for the premium members, so simply request it here and I will run the numbers. There are even more perks, as in daily market updates on where I see Bitcoin, Ethereum, and altcoins, or an entire course on technical analysis, on technical indicators. So you can find access to the premium membership at thebitcoinstrategy.com. Link is in the video description. You can either pay monthly, so the price is a bit lower now. We are not yet in a crazy bull market, and if you decide to pay yearly, you do get 2 months for free. Now, besides all of this paid content, I still continue to publish free videos here on YouTube. So don't forget to subscribe if you don't want to miss that value. And if you're wondering about Holochain's relative valuation versus other cryptocurrencies, how it stacks up if you long-term hold, if it makes sense to simply buy and forget, then definitely check out this video over here. So see you in that video, and thanks for watching this one. Bye-bye.